Welcome everyone. Welcome to Rethinking Balance Sheet. Hi, I'm Roshan Thiran, and welcome to our weekly Friday where we talk about everything balance sheets. And joining me, of course, every week is our co-host and my partner in crime, Ravindran Navaratnam, who will be joining us again today, this beautiful Friday. So Ravi, welcome to the show, and good to see you so relaxed and sitting down there and all in red. So either he's what was that imply? England fan, is it maybe?
Maybe not. Hey, morning, Roshan, and morning. Everyone. Good day to everybody. Whoever's right up from New York to Miami, down to Australia. Pleasure to have all of you all on the show this morning. Roshan, today I think one of the things that we've been looking at quite at length is the new fintechs coming in and the various financing platform. And in that sense, I think the show has, I think we are now really looking at a lot of the corporate finance issues being well discussed, and it's coming a great platform for viewers as well to give us comments. And I think we've also had some interesting comments last week in terms of people wanting particular shows to be done, right? So just to share with you, Roshan, we've got a lot of stuff coming up. We've got people lined up for franchising, SPACs, privatization, credit guarantees, also credit ratings, and so on. All these things that go into the financing, private equity, and even a show coming up pretty much on how you could improve yourself in terms of financial literacy. So I think we're going to have some great shows coming on. But this morning I'm terribly excited about having Vincent to join us. He runs one of the most amazing P2P platforms, and we should have a great show. And I hope a lot of people ask questions because it's absolutely revolutionizing, financial
platforms. Yeah. So and as always, we've got guests, who's already starting. Good morning. People are slowly streaming into our show. And just before we get Vincent to kick off, again, quick. Thanks to Necole, who's been our partner, and a quick little 30-second spiel on Necole. So here's Necole. Welcome back to Rethinking Balance Sheets, and Ravi, today we've got Vincent Soh joining us on the show, and let's bring our guests onto the show. Vincent, welcome to the show. MoneySave, P2P crowdfunding platform. Tell us a bit about yourself, Vincent.
Hi, good morning to you. Well, thank you for inviting MoneySave on your platform, wonderful platform. Now, MoneySave obtained its operating approval May last year. So we are about 14 months old, okay? And we are regulated by Securities Commission. And what basically we do as a P2P crowdfunding is where SMEs, whether they are underserved by the bank or sometimes they are unbankable, they come and seek alternative investments or funding from P2P crowdfunding platform. So there are about 11 of us in the market today, and collectively we have crowdfunded more than 1.2 billion ringgit the last 4 years. And we are supported by more than 30,000 investors, whether retail, high net worth, or institutional investors. Personally, myself, prior to starting MoneySave, I was in investment banking for about 5 years. 5 years of retail and commercial banking, and about 15 years of institutional fund management with big organizations like Prudential and also Kenanga Group. Those were the two institutions that I was in when I was in institutional fund management.
Vincent, I think,
yes.
Just to give a little bit of color to, all what you've just said,
Sure.
maybe, I know it's 1.2 billion, it's 30,000 investors, but nothing like a narrative and a story to tell us of a success story. If you could share that would give really good color to our viewers out there.
All right, thank you. Now, to put things into perspective, all right, we are a 14-year-old company, a 14-month-old company. So since launch, we have raised more than 71 million ringgit to our clients, okay? And that consists of about 477 campaigns that was crowdfunded on MoneySave's platform. So this means that whenever they need capital, they have come to us, and we have successfully crowdfunded 477 of this. And the tenor, we are a bit different from the banks, where the banks normally give you 1 year to 5 year loans, for example. MoneySave's investment that we do on these SMEs, on average, was only 3.7 months, as you can see the tenor here. So what they do is they come to MoneySave, they get some invoice financing, they get financing or payables, or they just come for working capital. So the average investment was about 3.7 months. All right. We have successfully returned to our investors more than 15% effective yield on our portfolio. And amazingly, my credit team have managed to maintain a zero default rate in the 477 campaigns. And the average investment that we have done per drawdowns, okay, is about 150,000. Okay. And you can see here the diagram. We pride ourselves. We were able to raise 5.8 million ringgit 2 weeks ago, okay, in less than 30 minutes. Okay, so in other words, when we hosted the investment opportunity online, okay, it was fully subscribed in less than 30 minutes by at least 300 investors. All of them pulled their money together and they invested in multiple fundraising campaigns, Ravi.
Oh, thanks, Vincent. I think we're having a little bit of technical problems, but I think it's still coming out very well in terms of your explanation. Sure. But that's, I think, part of the life with this internet platforms which we are using. But 5.7 million. But is there any particular sector you would say benefits more? I think we're talking about SMEs in general. Is it any particular sector you look for, or is there somebody that you're seeing a good trend where banks can't finance and you guys are really, doing the underserved market very well? What would you say there?
Sure. Just trying to check, Ravi. Do you see my slides online at the moment?
No, we can't see your slides at the moment.
No wonder.
You're frozen. You're frozen, yeah. A little bit frozen, but doesn't matter. Yeah.
As I talk, I'll just try and load the screen again.
Yeah.
All right. Can you see my PowerPoint slide now? The next one?
No, we can't.
Okay, no problem. So we have crowdfunded various industries. Okay.
You can see.
Now you can see the pie chart?
Yes, we can see the pie chart. Yeah.
Excellent. So we like industries that are in essential services, all right, currently. Okay. Inevitably, we will have funded some that is affected by the COVID, but thank God we have checked with them. They're able to still maintain their monthly repayment obligations. Yeah. As you can see, we have crowdfunded FMCG and e-grocery space with about 44% of our portfolio. All right. We like logistics commodities. So basically, some of the companies that we funded here, they are transporting crude palm oil containers. They are transporting the oil for Petronas. That means they are the ship owner that transport the fuel for Petronas. Sugar, silica sand. Okay, so this is the segment we are also we like, because we know that commodities has to be delivered all over Malaysia. All right.
Right.
We are into manufacturing. We have 2 or 3 companies that are supplying parts to multinational companies, whether it's aircon parts, automotive parts, okay, food manufacturing, non-F&B outlets, yeah, because F&B outlets, as much as we want to assist them or invest in them, we have our investors to answer to. So repayment capacity and visibility will be lacking in that space. So we are we are not in any F&B outlets, okay? But for food manufacturing and distribution, yes, we are have about 2% exposure. IT company, we love IT companies. We are funding ERP companies, enterprise resource planning companies, SAP companies, accounting software companies. So these are companies that are still are in very high demand. Construction and engineering, we are not in real estate houses, no. We are in commercial engineering. So if they got a contract to construct aerospace stuff, airplane components, commercial properties, we are funding one of our clients, e-grocer, Potboy. We are funding some of their subcontractors who is doing the renovation works for them to open convenience stores. Yeah. So these are a few companies, a few industries that we like. So for the crowd who are in this industry, do contact us as well. We are happy to invest in this industry.
But maybe, Vincent, if I go back a little bit and I ask you on F&B sector, obviously there'll be people out there who would be keen to do this. I understand the point about marketplace and so forth and difficult. But let's God willing, this pandemic comes towards an end, and there's a clear path, say even perhaps early next year. Do you see when there is clarity that these guys can start working? And they do need working capital to go back, buy stock, pay perhaps some backlog of suppliers, backlog of pay, wages where it's possible. Do you see yourself being able to fund this, and how would one probably think about funding an F&B space?
Okay, what happened is this. Our investments returns us a fixed return. Okay, whether it's 0.8 to 1% per month, which goes to our investors. That works out to about 9 to 12% return to our investors. And we do not enjoy any equity upside.
Sure.
Capital upside, yeah. So maybe if the market were to open again and the restaurant chain, some of them may need funding, maybe a more suitable avenue will be I'll say as maybe the venture cap or their private friends will be a better partner for them. The reason is we don't enjoy the upside, so we don't want to be caught again in the next 3 rounds of COVID MCO, for example.
Yeah, I see. Okay.
How we will support the F&B industry is that we are in final stages of funding poultry processing plants. We are funding the vegetable integrator, wholesaler. Okay, so we are funding the supply chain that supports the F&B outlets, because when we support them, they indirectly diversify the risk for us, because each vegetable wholesaler have got like 300 F&B outlets. Okay, so if 10% goes down, they still got another 90% to pay us per se.
Correct. So again, I suppose what you're saying is perhaps for the F&B guys, if you're buying from larger chains, those guys could give you some credit terms, and then you're getting cash in. You pay them back, and you're supporting at the back there. They can afford to give you the credit terms because they are now receiving financing.
You are right. Introduce us to your suppliers, okay, so that we can fund them, so that they can give you 60, 90 days terms.
Yeah, and I think that should, at least, I won't say whether it'll solve the problem, but it'll certainly be a help to these guys who are trying to restart their businesses. But I think it probably a great deal of F&B costs is fixed costs, both wages and rent. So that's going to be a challenge in any case. Yeah.
Well, Ravi, this strategy is basically rethinking balance sheet. Exactly. Yeah. The title of this event today.
Yeah. Yeah, that's quite true. Coming back to coming back to this thing about the types of financing companies can go to MoneySave. It's really just invoice financing, is it, or is it a little more than just invoice financing you guys are doing at the moment?
Okay, can you see the next slide now?
Yes, we can.
Cool. So typically the SMEs that come to us, we like to fund them or invest in them between 100,000 to 15 million ringgit. Yeah. We would like the investment to be trade related. Okay. So basically, it's invoice financing. You have sold some services, software, hardware, okay, or products to a company. All right. And we would like to advance you 85% of your invoice. So traditionally, this is known as factoring.
Right.
Okay. So we do that. We would like at least 50% of our portfolio to be in this space because it's safer. You have sold something. We are just waiting for the money to come. So there's no performance risk anymore.
Right.
All right. But before you can invoice, you just gotten a purchase order or contract financing for certain project from Tenaga, for example. You may not have invoiced yet. Then you need payables financing. You need to buy raw materials. If you got a job from JKR, you need to buy quarry products, bitumen, diesel, equipment rental. Okay. Now, if you have a bank to support you, sometimes the money don't come in until 2 or 3 months later. Okay. By then, it's kind of late already. So MoneySave can assist you to help you with your deposits, booking fee for your capex and equipment and for your mobilization. So this is where payables financing come in, and we would like to also target a 50% here. So 50% invoice, 50% payables financing. Okay, if we don't have to do working capital, we would like to avoid it. Yeah,
and I think I'm just going to digress a little bit, Vincent here, but sure. I think the main proposition is just not what banks are not willing to finance. What kind of turnaround times are we talking here? Actually, and I think that probably leads into the next question: turnaround times and information required in terms of getting this either trade financing or this project PO financing. Yeah, what's the turnaround times? What's my customer experience when I go to see you?
Cool. The fastest we have done, if you have, assuming you have provided all the necessary documentations to us, okay?
Yeah.
We have given letter offer between 48 hours, all right? So day 2, letter offer. Day 3, you come and sign the agreements, okay? Day 4, we start dispersing. So realistically, 4 to 5 working days is the fastest we're able to draw down for you, okay?
Yep.
But our promise to our client is 10 working days, okay, for us to draw down for you if you have got full documentations.
Right. So, but typically, I know everybody doesn't have full documentation. What's the typical period, even which you would actually see in practice?
I will say if they need the money urgently, trust me, the documents can come within the same day itself. Okay. Because they need the money yesterday, right? So typically it's 5 to 10 working days turnaround, and the money is already with the client already. That's how fast we do.
So what typical documents are you actually looking for?
Okay. So criteria for financing application. The next slide here, you can see I put in red.
Yeah.
Okay. So criteria, I need the company to be at least 6 months incorporated with 6 months bank statements. Okay. Less than 3 months latest management account. This means today is July. I will need the management account at least up to April. Okay. And if you have audited financials, if you are more than 1.5 years old, you should have your audited financials. But companies with less than 16 months or 18 months realistically do not have any audited financials yet. We could rely on your management accounts as well, because we use bank statement and other information like CTOS check on you and your secrets as a corroborative evidence that your company is real and genuine.
That's interesting. You only lend to companies as opposed to individuals. Is that correct? The business must be incorporated.
Yes, our approval is only for sole proprietors, partnerships, and companies, Sdn Bhd.
So sole proprietors could go to you.
They can as well, and we will rely on their Form B and their accounts as well. As a business, That's right, and also bank statements to support their business.
Okay, that's pretty interesting that you've actually asked for management accounts to be done fairly recently. I think this is one of the things that when we talked about even just bank financing, I think to a lot of entrepreneurs, for people out there, it's absolutely critical to keep a decent set of books and records. Yeah, it doesn't have to be the most formal stuff. I think, generally speaking, in terms of management accounts, but it's fairly easy and good software out there to produce management accounts these days. So I think that's a key takeaway. Even if it's non-bank financing, the basics of keeping some degree of accounts is required. Yeah.
Yeah, I mean, if you don't have your management accounts, how is an investor supposed to trust you, right? That your house is in order.
Yeah.
Yeah.
Well,
so good point. And it's coming about 20 minutes. We're gonna just take a quick short break, and we're gonna try and get some of these technical issues sorted out. So been an exciting conversation. We're gonna just take a quick 30-second break. So keep tuning in. We'll be right back here on Rethinking Balance Sheets. Today's special guest, we have Vincent Soh, who's joining us and who is enlightening us on some of these very interesting platforms that MoneySave has. So with that, here's a quick little teaser on Necole.
Woi, bro.
Apa dia?
Aku message kau 50 kali, tak balas.
Alah bro, aku tak ada time lah bro message. Aku sekarang tengah Necole bro. Necole lah, itu dia in sekarang. Tengah trending tengah kacau.
Kau cakap apa? Apa tu?
Necole. Kau tak tahu Necole? Google kau tahu? Necole kau tak tahu? Tak, Necole app untuk belajar bro. Semua tengah belajar guna Necole sekarang. CEO semua tengah guna Necole.
Share sikit lah.
Boleh bro, kau tengok macam ni bro.
Okay.
Kau kalau kau lembab, kau kena Necole bro.
Memang aku lembab sikit sebenarnya.
Bro, kalau kau nak laju, kau nak top, kau nak jadi CEO, kau kena guna Necole. Kau tahu kan pergi mana? Digital.dynamic.org. 200 je bro top.
Aku buat tu aku tak lembab dah.
Tak tahu bro kapasiti kau macam mana. Tapi aku rasa Necole ni boleh tolong kau lah bro. Confirm.
Okay. Berapa?
RM200 je bro tahun.
Boleh lah duit raya pakai ya.
Selamba bro. Ni kau tengok ni bro. Cahaya bro, kau tengok ni. Ini daripada Howard bro. Power bro. Woi,
memang cantik.
Apa ni? Jangan ambil akunya.
Okay.
Aduh.
Sorry. Aku teruja sangat lah.
Ni tak apa kita tunggu sikit.
Welcome back to Rethinking Balance Sheet. Ravi, it's an interesting conversation with Vincent. Again, I think we've had a couple of platforms similar, right? We've talked to invoice financing and a couple of things similar. And we're going to bring Vincent back shortly. But maybe Ravi, your quick sort of takeaways from
just remind everybody. Yeah, there's finance now. There was one Puva Privasia, a listed company which was providing that service. We had an exciting one from Acceleron in Indonesia. But what we've definitely gone through the whole process of discussing in terms of let's get people in on how long it takes to get the financing out, what's the disbursement, what's the documentation, etc. And let's just coming back to key takeaways. I mean, when people come to say, I need a financing in a month and a half, we just turned out the assignment. But here's a guy who said,
10 days, right? Maximum 10 days.
Yeah,
5 to 10 days.
Yeah.
5 to 10 days.
5 to 10 days. Yeah.
Certainly,
that's certainly not in the psyche of the banks around that. That's for sure. So it's going to be
an opportunity.
It's certainly, I know a lot of people come around that, but again, I think that's the key thing, right? That 10 days all works only when you've got your information done. So even if you're looking at non-bank financing, do think about stuff. SMEs do think about the idea of having your books done. And you don't have money. How do you actually get things done, right? No money is just difficult to get suppliers to supply you, etc. Still, I think the key question out there is the F&B sector. We definitely need to have more conversations, more ideas on what can be done to help that sector.
So let's bring Vincent back. Vincent, welcome back to Rethinking Balance Sheet. So MoneySave, you were talking a little bit about some of your pieces, and I think you had some slides that you wanted to share a little bit also. So we'll get that up and running in a short time. And Vincent, we can see you now. So it looks like our technical difficulties have been sorted out. And for those of you who are in the audience, if you need any questions for Vincent or questions for Ravi, shoot them in the comment section, and we're happy to take them as we go on. So Ravi, I know you guys are having engaging conversations. Please do continue the conversation.
Okay, I think a little bit of a question here for Vincent.
Sure.
I think we talked about the landscape itself, and that's been interesting. The landscape itself has been interesting, Vincent. Can you just a little bit of, okay, there's all this stuff about how we reduce risk, but before we go into that in more detail, and that's on the investor side, but what's the landscape in terms of, you talked a little bit about 1.2 billion, but to give the audience a think of this, and if I were to challenge you and ask you, where do you see this industry in 3 years' time? How large do you expect this to grow to?
All right. The space that we are playing in, okay, is traditionally known as factoring trade finance market, where there is no collateral involved. Yeah, Ravin.
Yeah.
So we just need to look at Hong Kong and Singapore, okay, where they are currently back in 2019, 15% of their GDP is factoring. Wow. Factoring volume to GDP is 15% of their economy. All right. Malaysia currently is only at 0.59% of space. So if we just target half of what Hong Kong and Singapore is doing in the next 5 years, we are looking at about 7% of GDP, or approximately 100 billion market for the space that we are playing actually currently.
Yeah. Okay. So it's if we get anywhere near 15%, then you're talking about a trillion, 1.2, 1.3 trillion economy. 15% of that is in the 150, 200 billion size mark. That's huge.
Huge.
It's huge. Yeah, it is absolutely huge. And you said there was 11 players. Are they all fairly similar in what they do, or do you see some diversity? Because in the end, again, I never see competition as bad. I never see that entirely to be the case. Because if the competitors doing, the whole industry is doing well, it's not necessarily a bad thing. Even in my space, the business I am involved in, we get more and more better players. It's only good for us as well. So on that note, what can you say a little bit about, are there any different niches, or just purely this invoice financing as all these platforms all about?
Actually, the 11 of us, each one of us have got a specialty actually. When we were approved, I understand SC has cut out, this is your value proposition, please focus on it to start off with, so that the various underserved segments are taken care of. So there is P2P that specializes in insurance financing, equipment financing, and micro financing, also got those 100,000 and below. Yeah. MoneySave is a position itself to be in the invoice space and also the mezzanine space. All right.
Right.
So in this particular play, we frankly do not see any competitors in the market yet.
Right.
Okay.
Yeah.
So the bridging.
Go ahead. You were saying something. Go on. Finish that.
Yeah. In the diagram here, we are targeting companies that are limit up with banks, meaning you have outgrown your bank or outpaced your bank. Okay.
Right.
The bank reviews your limit every 3 to 6 months. MoneySave review your limits every month.
Right. Okay.
The money that we invest in $1 million, in 4 weeks' time, show us that you have converted it into a sales. Okay.
Right.
In 60 days. Then you come back to us and say, hi, Vincent, we have converted your investment. We need more. Okay. So give a classic example of our online grocery company. There is the 9/9, 10/10, 11/11 super sales, right? All those special dates.
Yeah.
So when they engaged us back then in September last year, we only crowdfunded them 1.5 million. But they say, hey, 99 is coming. I need more. I need to stock up another 2 million more because justified, right? 99, 10, 10, 11, 11.
You're
So
right.
every one season, they managed, whatever we pump to them, they converted into sales. We validate their bank statements, okay, to see that, hey, they actually have sales receipt from the payment gateways. And we finance them with payables, actually. We didn't finance them with invoice financing because they are B2C model. So we help them to buy their stocks, buy their shampoos, diapers, and etc., put into their warehouse for them, okay, and they convert it into cash sales. So I don't think the banks can move this fast, simple as that.
Sure. And I suppose, all this again comes back to that wonderful thing about ecosystem. If the payment gateways were not there, the e-commerce, and that's just wonderful to see that at work and beginning to pick up here at home. But can I just ask you, in terms of, okay, we talked about Singapore and Hong Kong. I'm sure you have aspirations to go to the rest of Southeast Asia, more. I mean, let's be honest. When we had Rafiza on, she said this is only a 30 million population country. I mean, there's only so much we can grow at home. What's the space in across Southeast Asia, and where's the opportunities?
Well, if you look at my slide earlier on, we are looking at also 7 to 10% of the ASEAN economy.
Yeah.
Okay. So I took out one, but we are talking at about fivefold of this. It's a 500 billion ringgit market for ASEAN alone.
Yeah.
It's huge.
So that's about 120 billion US dollars. That's sizable, yeah.
That's right.
It cannot be ignored. Yeah, it definitely is one that cannot. But I think that's just as much as on the SME side of the balance sheet. Since I think there's all sorts of viewers on our show, there's probably a lot of super wealthy people who would like to invest in, on the not on being asking you to finance invoices, but happy to do the financing or to be matched into that financing. Maybe you could share a little bit about that story and who you're looking for, what's happening, how worried should I be when I put money into MoneySave?
Sure. So why does investors invest in MoneySave's investment solutions? We have built the company slowly, steadily, and we have maintained 0% default rate. Okay. And we have chosen our companies that are A and B and C rated. Most of our portfolio, 70% are ABC rated by credit rating agencies. Okay.
Right.
So I'm going to give you a case study here. Okay. And show you why investors have confidence in MoneySave. And we are truly unique, and I pride ourselves again to be the first in the world P2P with more than 20 risk reduction incentives. And let me share with you and ask you later on in just 3 minutes whether you will invest in this particular company or not. Yeah. So Ravi, I'm going to start off typically because we are financial background. On our investment fact sheet, we tell you the revenue of the company audited. For example, this company 32 million, 55 million, and 38 million for the 5 months in operations for 2021. So this company is going to hit almost 100 million sales. Yeah. So 32, 55, and 100 million. You can see the 100% growth here.
Trend.
Yeah, Ravi?
Yeah,
yes.
Clear trends.
And this is eGrocer, a company called Potboy. All right, and profitable. And you can see its total assets is growing, total liability is growing, but it's got a net worth of about 4.3 million today. We also help you review their bank statements and to ensure this company is genuine. What it is reporting in its audited numbers is reflected in the bank statements. Yeah, 6 months we review. Okay, make sure they pay their EPF, pay their suppliers, and they receive payment from the various payment gateways. We also show you what is their conduct account with other financial institutions, because we obtain consent from them to actually check their secrets information. Okay, so these two, the company and the guarantors, are prompt paymasters. This particular company, Ravi, we have now approved a credit line of more than 15 million ringgit. They have disbursed we have disbursed 145 times to them. they're fully settled 129 times. Okay, and you can see they use MoneySave as their accounts payable financier. Every week, 2 or 3 times, 100 to 200,000. Whenever they want to pay for their Milo, the diapers, to a certain company, we help them disperse. Okay.
Right.
Now, next question is, why would they want to pay 1.2% to 1.3% per month? Because that is their total cost of financing. Very, very simple, Ravi. When they have the 191,000, they pay cash to Nestle or other suppliers. They will get typically between 2 to 3% cash discount, Ravi.
Right.
Yeah. So if you are the entrepreneur here, wouldn't you want to take 191,000, pay MoneySave 1.2%, enjoy a 3% discount?
Absolutely.
Immediate wealth creation here.
Okay. I think even if you look at a traditional bank and I'm not a credit person, I'm more in investment banking and corporate finance, but even a traditional bank would have cleared a lot of the things that you've said. They've definitely have gone through the bank account, but they tend to do it manually. They'll have gone through it. They will know the customer. Obviously, you've done a lot of things around that. Now they tick on the customer itself, the guarantor, the CTOS, the secrets. You've ticked all that. They look at trends. You've definitely shown positive trends. They'll also look at why would you want to do it. That's a critical thing. Why would you want? Of course, they'll look at second way out and third way out. That's not something that you will do because you're not doing secured lending or guarantor, etc. I suppose that's one of the differences. But you've looked at the financial statements. You've done the ratio analysis. Yeah. As far as when banks do unsecured lending, it's really for the very large corporations, right? Which they would do unsecured lending. But here is, it's obviously, what I would say is, it's just an underserved market. Yeah, banks don't want to do this, right? Even if you go and get a trade finance with a bank, they're looking still for some security. You got a shop lot to give, or you got something to give. They always ask you these questions, right? Of course, they can give you overdrafts and some advantages there, but look at this. Like you said, you seem to tick all the boxes correctly. That's what I would say. Yeah.
Yes, sir. Ravi, over and above what you have mentioned, MoneySave has got these risk reduction incentives. Yeah. Now we help you secure director's guarantee. Okay.
Yeah.
And because they reduce their risk as an investor, we reward them with a 1.5% profit rate reduction. I use profit rate because it's Sharia compliant. So we don't do interest. So we do profit rate reduction. You can see 1.5% discount here. Okay. Yeah. To further reduce your risk, we help collect.
Sorry, can you explain that again on I think just so that the viewers can get that again? We just had a little bit of a technical thing.
Over and above the financials that we have just shared with you, we further reduce your risk as an investor. Okay. So the SME business owner, what they have given to us is key director's guarantee.
Correct.
Okay. We reward them with 1.5% discount.
Oh, when they give their guarantee.
Yes. And then post-dated check, 0.5% discount.
Right.
The financing that they obtain from us, they pay us on monthly installment as opposed to a bullet repayment.
Right.
They enjoy another 1.5. They have made more than 100 continuous settlements, full settlements to us, 0.75%. Now, this ensures if they continuously want to enjoy the discount here, they have to make continuous payment on time to us.
Correct.
We make payment directly to the seller. All right. This is a payable financing. We have to pay Nestle, for example. We will pay directly to Nestle. So this will reduce the chances of them abusing the money.
Sure.
And the seller has got net worth more than 10 million. We show you who the seller on a no-name basis. You can see. Seller was established in 1974, turnover of 291 million and shareholders from 11.5. So we obtain the CTOS-like information of the seller and we put it in because they ask us to pay to, for example, if this is Nestle, they ask us to pay to Nestle. So we put Nestle information here for you.
Right.
And because of that, we give them another 1% discount.
Yeah.
So this is risk reduction incentive explained. lowering of risk, we give the reward to the SME business owner a 6.75% discount. And because of it, Ravi, they only have to pay 8.5% flat returns to the investor. So if you invest 172,000, Ravi, you get 2 monthly installments of 87,542 ringgit per month back.
Right. Okay. And the yield on that would roughly work out to?
The yield will be about 8.5% flat rate.
8.5 flat. Yeah. Okay.
But because you are receiving money in 2 installments, okay, you get to reinvest the money that you receive on month 1. When you reinvest back again, you earn additional income. So that will give you an effective return of 11.32%, sir.
Oh, excellent. Yeah, excellent. Again, I suppose it's, Again, I think...
Sorry, Ravi, quick one. If you have 1,000 ringgit to spare, okay, will you invest in this particular company and earn 11.2?
That is the value proposition, because these are small amounts of money. I mean, it's, of course, you got to, as most things in life with ITs, you got to do that. They say at least 5 transactions, and then it gets easier, right? I think the biggest problem for me to do this deal is I got to figure out all the steps to log on, fix that, and get on. I'm still using my traditional stockbroker because I just can't be bothered to go, and get myself, onto one of these platforms which are much cheaper. But I still find it easier just take a call and call myself. Yep, I think the moment someone gets onto it, I can see the attraction. So I suppose the real problem is when you're talking to, some people is like myself is getting them to do that first transaction is, I think, going to be the biggest single challenge. The proposition itself is good, but probably you're not thinking of the issue on just getting across that the inertia to get onto a platform to make those investments. But that will improve over time. And for people like me, perhaps sometimes it's just to get my son to do that for me. It'd be easier.
Yes, sir.
Yeah. Absolutely.
Good. We've got some, we got some comments from folks. I mean, obviously, I think this is a secret code from Husni to you, Vincent. Nisi Dominus Frastra. Is that your school logo or school slang or probably,
Yes.
Some secret code between you guys. And there's a question. What are some of the concerns that business have when they get on MoneySave? Is there any issues and challenges?
Frankly, we have processed more than 300 applications the last 12 months. Okay, and we have approved about only 20% of them. Okay, 80% are still rejected by us. Most of the times is because number one, of course, quite a lot from the F&B outlets. Okay, so that itself is really 20 to 30% already, and then the other 20-30%, they don't have management accounts up to 3 months old. Okay, so if they don't have, then we can't assist them because they don't have their house in order. So we can't put up a nice and factual.
And this is primarily sole proprietors, I'm assuming, right?
Frankly, even Sdn Bhd today in Malaysia, there, because we are dealing, assuming we don't say your turnover must be 10 million and above, then only you can apply to us. So we are open. Yeah, you can go online and apply financing just a click away, and you can start application process. So we're getting rejection because not enough paperwork. Okay, but at least our approval rate is 20 to 30%, whereas I think the bank is possibly 5 to 10% only. So we are more lenient to accept companies less than 3 years, companies with less profit track record. We look at what they call it supporting risk reduction here, and we are more what they call holistic in assessing the credit of the company per se.
Okay.
Yes, Ravi.
And
I think we're coming to the end of the show. We could go on forever here, but I'm going to put you a little bit on the spot, Vincent. Not normal, but if the finance minister came to you today and said, Vincent, we've got all these guys with moratoriums and debt building up.
Sure.
How could we possibly help this huge issue on the SME sector, and how do we get around to thinking and solving this? What would your answer? What would your answer be?
Excellent.
Other than it's beyond my pay grade and I'm not answering.
I hope the minister is online today and somebody can get this message to him. Okay, if you want to help the Malaysian economy, we are one of the possibilities. Okay, if the government bodies, government GLCs, right, if they can introduce us or engage with us, like what I'm engaging with Teraju and CGC and PLC, for example. If they let us engage their ecosystem, and if their ecosystem suppliers and subcontractors, they are willing to pay about 1.2 to 1.5% per month, which in normal circumstances is not a problem. All we need the GLCs to do is agree to do assignment of payment to MoneySave. Just recognize us similar to Maybank. If you can pay to Maybank assignment of payment for your subcontractors' debts, for example, do the same for us. Then the market, the crowd, you and me, there's 1.4 trillion ringgit of depositors in Malaysia, Ravi. 1.4 trillion, more money than EPF. Okay, yeah. I think 10% of them can mobilize 140 billion ringgit to crowdfund Malaysian SME directly, not the stock market, yeah, directly to the companies that need the money, that need the working capital to make Malaysia great again. Wow. So if anything, I say, introduce us or let us have access to the GLCs. Let the GLCs agree to assign payment to P2P outfits like MoneySave, okay, and we can crowdfund the economy with 140 billion of private money, not public money.
I didn't realize the deposit levels are so significant in Malaysia.
No, the banking system is huge, so it definitely has a large amount of liquidity
deposits.
I mean, the issue is obviously, and some of it obviously sitting in current accounts, savings accounts, which are hardly paying anything these days, and even fixed deposits. And this is 8.2%. Just to put perspective for people out there when they're doing FDs, you're trying to get a little bit higher numbers. Today, you have to go to a bank. They're going to say to you, 3.2%, 12-month lockup.
Yeah, my friend, it's 2% now, Ravi.
Yeah, but that's on the very short end, but you can get a little bit better on the longer end, yeah. But you need longer lockups, lockup.
So for people who want to invest their money, they just go to this website, moneysave.com.my, and they can register as an investor and dump the money in, right?
Yeah. So just to pick up that, just to pick up on that point, that's absolutely right, Roshan. Just to pick up where Vincent left it. When he's saying 2%, he's absolutely right, because a like with like comparison is a 1-month FD against the 1 to 2 months that he's offering there. It is 8 versus 2%. Of course, there's a risk difference. I mean, there's no default on banks in Malaysia, but there is some level of risk. But think about it: if Vincent is not even losing any money, but let's take the worst case lah. He is going to lose somewhere, 5% or something, right? If you put $110 in there, and you get $8, from that, and then one of them goes wrong and he loses about $1 or $2, doesn't fully recover, you're still going to be way ahead. And that's something about one of the things that it's great about what Vincent is talking about is because when you actually invest in low grade or non-investment grade credit, it's your ability to diversify. Yeah. And what Vincent's offering from an investor's perspective is, well, if you got $100,000, you don't have to put 100,000 into one of his deals. You can put 25,000 deals, and you got the diversification. Even if Vincent doesn't hold his 100% track record, you're still covered. You will still do better than FD.
You can split 1,000 per note, or you can split a 5 ringgit per note, Ravi, because the minimum investment on MoneySave is 5 ringgit.
Wonderful.
Yes.
Yeah. So it's fantastic. So any questions, you can always reach out to Vincent, and his email is right there. And maybe just to wrap it up, Vincent, your final thoughts, your final kind of closing statements that you want to share.
Okay, cool. We want to ask for your assistance, to engage your business network. All right, introduce to us. We want to reach them fast enough. So if your friend or if you are for example, from Teraju, from CGC, from Association of Malaysian Aerospace, okay, you are association leader or alumni, okay, please contact us, all right, become our guest. You know why? Because when you become our guest, your 1,000 members, okay, will follow you and get to know about an alternative financing from MoneySave. And with that, we can reach 40,000 SMEs and empower 1 million families together, you know. So I need all of us to spread the good news that capital, frankly, is not an issue anymore if you have a genuine business. All right. Previously, it was an issue. It is no longer.
Fantastic. Thanks, Vincent. And Ravi, your closing thoughts as we wrap today up.
Again, I just have to thank Vincent so much here. And what I would like to see a little more, and the very reason I got to meet up Vincent was a reference to a private equity firm. The story doesn't just end here with one approach. And that's what this show is all about, is looking at multiple approaches in financing. So again, it could be Vincent, it could be our friend Wong Yok Neng, who came on the listing story of 1 million ringgit. You can list on a major exchange in Asia, be Bursa Malaysia. It'll be the guys which are coming in next week. You've got Yasser of Equinas coming in. It's about that, or it's about matching Vincent with Suresh last week and his clients, in terms of it. So I mean, I think what we've started is amazing, but and as we get more and more guests on board, I hope people will look at Necole and have a look and see, hey, there's an idea here, can I match it up?
Yeah, and we got great. Subin says thank you, been very insightful, and Malik also says thank you. And in fact, now Subin and Malik are building a friendship. Hey Subin and hey Malik, and then Malik's recommending very useful for your business, and Malik's there's a big conversation on my plate full, and all kinds of talks happening. So thank you. It's been great having you here on this show, Vincent. Much appreciated. And Ravi, as always, it's about bringing different ideas, different insights, and different potential opportunities to our SMEs and also to our business community. So with that, thank you very much, everyone, for taking part in today's Rethinking Balance Sheets. Vincent, much appreciate your time. And then the conversations online keep going. So we're very excited with all the different comments that are coming in. Lots of thank yous.
Yes, I think last week we had a request for Tan Sri Tony Fernandez, did we?
I think so. Yes.
Well, let's get that invite out.
Yeah, so we'll get Tan Sri Tony Fernandez on, and you guys can grill him till the cows come home, right?
All right.
So,
well,
Tony, beware. Ravi's coming after you.
I got my red for that, and that's why the red.
Got the Air Asia radar. All right. So with that, thank you, everyone. It's been great talking to you. We are Rethinking Balance Sheets every Friday, 10 a.m. Kuala Lumpur, Singapore time. We will see you next week, same time, same place. And thank you guys for your comment. Thank you, Ravindran. We will continue to engage and do engage with Vincent this week. Goodbye, everyone. Take care. Bye-bye.
Bye.